Ever thought about how some traders seem to have a sixth sense about where the market is heading? They're not using any supernatural abilities. They're using technical analysis. Today, we're going to reveal the secrets behind one of the most powerful tools in their toolbox: support and resistance areas. Stick around, and you'll learn how to read the markets like a pro. Hey guys, welcome to our short series where we'll break down everything you need to know on how to trade on your own. From technicals like trend lines, support and resistance areas, patterns like head and shoulders, double tops and double bottoms, flags, etc., various indicators like moving averages, RSI, volume, stochastic, and more. We will also talk about the fundamentals of the companies, like the ones we've talked about in a previous video on the basics of fundamental analysis. But we will go deeper on each one of the metrics, ratios, and financial statements like balance sheet, income statement, and cash flow. Whether you're a beginner or a pro, there's something new and valuable for you in this video. So stay tuned, because this could be the game changer you've been waiting for. But before we get started, do me a favor and hit that like button and subscribe so you don't miss out on our latest tips and tricks. It's totally free and helps us keep creating awesome content for you. You can also comment below if you want me to create a specific video you would like to watch. All right, let's go. Section 1. Understanding support and resistance. Support and resistance areas are like the pillars of a building, providing structure and stability to the price movements of a stock. Support is the price level at which demand for a stock is strong enough to prevent it from falling further, acting as a floor for prices. Resistance, on the other hand, is the price level at which selling pressure is strong enough to prevent the stock from rising further, acting as a ceiling for prices. Imagine support and resistance as invisible lines drawn on a chart, guiding the movements of the stock. When the price approaches support, it tends to bounce back up, as buyers step in to purchase the stock at an attractive price. Conversely, when the price nears resistance, it often retreats, as sellers take advantage of the higher prices to sell their shares and make profits. Let's take a look at an example, using TradingView, a free tool for technical analysis. Here, we have the chart of Apple's stock price over time. Notice how the price tends to bounce off a certain level before either continuing its upward trajectory or reversing its direction. These levels where the price bounces off are called support and resistance levels. For instance, in an uptrend, the price might bounce off a support level like this, indicating a potential entry point for a long position. Conversely, in a downtrend, the price might encounter resistance here, signaling a potential opportunity to enter a short position or take profits. To draw a support and resistance area, all we need to do is look back at our charts and identify the most recent 2 or 3 areas where the price hit and changed direction. These areas should be relatively close to each other, rather than widely spaced apart. We refer to them as support and resistance areas rather than lines because it's nearly impossible to pinpoint the exact levels. For example, on the Euro-USD chart, between March 2015 and December 2015, we observed 3 bounces between the price levels of 1.045 and 1.065, indicating a support area. Similarly, between January 2015 and October 2015, we notice 8 bounces between the price levels of 1.155 and 1.140, suggesting a valid resistance area. Let's see a more recent example of Euro-USD between November 2022 and November 2023. Here, we can observe 5 bounces between the price levels of 1.055 and 1.045, indicating another support area. In the first circle, the price encountered a resistance area, and about a month later, it broke through the resistance area. Subsequently, it retested the broken resistance area that now acts as a support area, as shown in the second circle. This also serves as a valid point to draw a support or resistance area. After all these 5 bounces, we can see that today, February 2024, the price is close to our support area. You can check what's going to happen if the price reaches this area. Most likely, it will bounce back up. On the other side of the chart, between January 2022 and December 2023, we notice another important resistance level between 1.115 and 1.1025, while we had 7 bounces. You can also see a false breakout on the upside, that a few days later, the price went back down again. For the exact explanation of the false breakout or breakdown, Check the video pinned somewhere up here. After the explanation of support and resistance levels, we will proceed to execute two trade examples on the Euro-USD pair, one for a short sell and the other for a long position. Let's see how we can short sell the Euro-USD that bounces off the resistance area. We can identify the resistance area between 1.14 and 1.15, where we observe 2 to 3 bounces. After the third bounce, the price retreated to test the support level of 1.08 to 1.10 before rebounding back towards our resistance level. Once the price retests the resistance level, we can initiate a short position after a candlestick closes below the lower boundary of our resistance level. Our stop-loss order is placed above the highest point the price reached during the bounce, which also had trouble moving higher in January. Setting a take profit at a 1-to-1 risk-to-reward ratio, we can observe that the price eventually reached our take profit level after fluctuating. Let's see another example on July 2013, as we observe the price testing the support area between 1.283 and 1.266. Considering it as a strong support area due to the price bouncing off 6 times in the past, we decided to enter 3 long positions on this example. We set the stop loss within the support area, approximately around the 1.256 level, that is about 2.9%. The take profit for the first position would have been set at around 1.34, for the second position at around 1.365, and for the third position, we would have allowed it to run and trail our stop loss below the most recent low the price makes after making a new high. We can then see that the price really fast hits our first take profit, retraces back, then goes back up and hit our second take profit, and goes back down again. Then we start trailing our stop loss of our third position below our last low at around 1.33, the price goes up again, and retraces down to the level of 1.347. We trail our stop loss again under that level, that we later got stopped out in July 2014. All of our 3 long positions gave us a profit of 3.36%, 5.18%, and 3.79%. Not bad, right? After these 2 examples on Euro-USD, you must have an idea of what support and resistance levels are, and how to enter a long or a short position after identifying these levels. Identifying these key levels on a chart is crucial for traders. They provide valuable insights into potential entry and exit points, as well as the overall strength or weakness of a stock's trend. And that's how to trade based on support and resistance areas. I hope you learned something today. Don't forget to give this video a thumbs up and subscribe to our channel for more valuable content. You can also comment below your questions or your suggestions for future videos. Also, in order to understand the video even better, re-watch it again, or parts of the video you didn't understand 100%, so you make it sink in your brain completely. Understanding support and resistance is an essential skill for any trader looking to make profits in the world of trading and investing. In this video, we've covered the basics of this concept, but there's much more to explore and learn. So, grab your charts and start practicing. And of course, stay tuned for our next video, where we'll talk about trend lines and uncover even more trading secrets. Before you go, I'd like to recommend the broker I use, eToro. As one of the industry's leading brokers, eToro offers thousands of assets, transparent trading fees, speedy withdrawals, and a user-friendly interface. One standout feature is copy trading, which enables you to replicate the portfolios and trading strategies of successful investors with ease. You gain access to their trading statistics and history, and once you've copied them, you retain full control over your portfolio for any adjustments you wish to make. If you would like to have a look, click the free link in the description below. See you later, guys.